Good morning, students. How are you all? Hope you all are fine. Okay, students. So, in accountancy, we were learning the seventh lesson, isn't it? Company accounts. In company accounts, we are in the last stage. By today, I will complete that one, and again, I will start the next lesson also. Okay, very few problems there. The next heading I am teaching you. The remaining questions in the previous heading we will leave. Okay, the same pattern only we will leave, and we can do at last. Okay, then the other two headings I am going to teach you, and afterwards I will start the eighth lesson. Now, for half-yearly examination I will complete 9 and 8 and 9 alone. Okay, I will try to complete because these two are little big, okay, lessons. I will try to complete, but the 10th lesson I don't know whether I am able to complete. Okay, so up to 9 lessons I am going to take questions also. Okay, students, thank you. Okay, now we will start. Issue of shares for cash in lump sum. Sometimes the company, we have learned that the issue of shares in 4 installments, isn't it? The other one, the second heading only, issue of shares for cash in lump sum. Here only one installment only they are going to receive. Okay, full share will be received at the in the same time only. Okay, here also they may issue at par or premium. Okay, at lump sum, maybe at par or premium. Par means that face value, that more than the face value, premium. Okay, if they have issued at premium, what are the entries? So the same entry that we were preparing for the first one. Okay, what is the first entry? Bank account debtor to share application account. Okay, then that transfer of share application money to the share capital. So equity share application account debtor to equity share capital. Okay, if we receive issue shares at premium, that premium account must be credited as securities premium. Okay, that's all. If par 2 entries, premium 2 entries. Okay, shall we do one exercise? 19 and 20 we will complete. Okay, 19. Abdul Limited issues 50,000 shares of rupees 10 each, payable fully on application. So, okay, lump sum. Past journal entries, if shares are issued at par, second one at a premium of rupees 3 per share. So, first we have to write number 1 at par. We have to write the journal entries, isn't it? What is the first entry? First entry, issues shares, isn't it? So, bank account data. When we receive bank, isn't it? Cash. Bank account data to share application. Then share money. Share money received. Money received. Which money we can write? Share application. Money received. Here 50,000 into 10, so 5 lakh. Okay, then second one, for transferring this application money to the share capital, very easy, isn't it? Share application account debtor to share capital. Okay, application money transferred to share capital account, same amount. Okay, 5 lakh. Okay, then issued at premium. Here the same amount. Entry same only. First one. Bank account debtor to share application. How much? Here 10 plus rupees 3 premium, isn't it? So 13 into 5, 6,50,000. 6,50,000. Here share application, money received including premium. Okay, including premium. Okay, then B, share application transferring. Okay, share application account debtor to share capital account to securities premium. Okay, application money transferred to share capital account including securities premium. And enough, and securities premium account. Here share capital only 5 lakh, isn't it? So the remaining premium 3 rupees into 50,000, 1,50,000, totally 6,50,000. Okay, 2 entries. The same thing if they ask, they may ask here for 5 marks also. Okay, one time they have asked 5 marks, 4 entries only, very easy question. Or they may ask at par, for 2 marks also they can ask. Okay, only 2 entries, application account debtor to share application, and share application will be transferred to share capital. If it is premium, first entry will be the same, the second will be including the securities premium. For that one, first entry will be the same, second one entry only we need to change. Okay, so the next heading we will see now. First one, they issue shares for in lump sum. Okay, now they can issue shares for consideration. Issue of share for consideration other than cash. Sometimes they may not issue shares for cash, but they will issue shares for consideration. Maybe any other thing, maybe the stock or the land or the building we can purchase. At the time of incorporation of a company, or at the time of starting a firm, business firm, they may, what they can do, they will they will purchase that land, and instead of paying cash for them, they may issue share. Okay, for the money that they have to pay to that particular person. That is called issue of shares for consideration other than cash. Okay, here at the time of purchasing that asset, what is the entry? Ordinary entry we know, isn't it? That asset. For example, if we purchase building account debtor, isn't it? Which asset we are purchasing, that one, to that ordinary entry. Who is giving? The seller or the vendor, from whom we are purchasing. Okay, that is the entry. Then for the issue of share, okay, again the vendor we need to cancel, so we need to debit vendor account debtor to share capital. If we issue for premium, we need to credit the securities premium account. That's all. Okay, here two entries. If we issue shares for consideration other than cash, first one at the time of purchase of building. Okay, building account debtor to vendor account. This vendor means from whom we purchase that building, that asset. Okay, then we are issuing shares, so share capital should be credited. This vendor we need to close. Okay, so he is the receiver of the cash, that share, isn't it? So vendor account debtor to share capital. If we issue share for premium, then premium must be credited. Okay, at par means this will not come. Okay, building account debtor to vendor, then vendor account debtor to share capital. If we issue shares for consideration other than cash with the premium, then second entry will be this. Okay, shall we see the last one? Paradise Limited purchased assets rupees 4,40,000 from Suguna Furniture Limited. It issued equity shares of rupees 10 each, fully paid in satisfaction of their claim. What entries will be made if such issue is at par and at premium of 10%? Okay. So first we have to write the number, isn't it? 20. Then what is the A? Okay. Issue of shares. At par. Okay, what is the entry? From purchased assets from Suguna Furniture Limited. Asset only given. Okay, so we have to write asset only. Assets account debtor to vendor. Who is the vendor? From Suguna Furniture Limited. So Suguna Furniture Limited. Purchased assets 4,40,000. Second one, we are that converting this one into capital. Okay, issuing shares. Vendor account debtor. So Suguna Furniture Limited account debtor to share capital account. Okay, issue of shares. To Suguna Limited. Same 4,40,000. Okay, then B, next heading, issue of shares at premium. The same entry, isn't it? First one, from whom we are purchasing. Assets account debtor to Suguna Furniture Limited. Same thing, 4,40,000. Purchase of assets. Okay, the next entry. issuing shares for premium. So we issue shares with the premium. So the receiver is the Suguna Furniture Limited. Debtor to share capital to securities premium. Okay, issue of shares at premium. Okay, here 4,40,000. Here 4 lakh. Here 40,000. Okay, that's all. For entries, they may ask for 5 marks or 3 marks as per their wish, but you should know. Okay, very easy. Now we will learn the next lesson. Okay, the next lesson is financial statement analysis. Okay, here first we are going to learn what is financial statement. We know what are the financial statement. Every business concern, they will prepare the financial statements at the end of the financial year. Okay, that financial statement includes the income statement and balance sheet. Income statement and balance sheet. The income statement shows the profit or loss of the business. Profit or loss. From the balance sheet, we will come to know the financial position of the business. Okay, so but it shows the performance of the business, we can say, the income statement, how they perform, whether they have performed efficiently. So the performance of the business can be judged by the income statement, or we can say the trading and profit and loss account. Okay, the profit or loss will be computed from the income statement. From the balance sheet, we will come to know the financial position. So here, how much is the assets and the liabilities. Okay, what are the assets they have, they own, and what are the how much they are owe. That means how much they are liable to pay. What is their responsibilities. Okay, so now we know the meaning, isn't it? That this is the meaning, financial statement. Then what are the features of this financial statement? So it is prepared at the end of the accounting period, isn't it? End of the accounting period they will be prepared, and it is prepared for the whole organization. Okay, that means one financial statement only will be prepared for one organization. Okay, then they will be grouping the similar headings. For example, assets. Assets means they will group all the current assets and the fixed assets together. Okay, they will not that mix up with the fixed assets with the current assets. No. Okay, they will be grouped into under different headings. Current assets, fixed assets, then current liabilities. Okay, long-term liabilities. In that way, they will group the items which are given in the balance sheet as well as the profit and loss account. Okay, then this the financial statements are prepared based on the historical data. We have learnt already, isn't it? Historical data, historical cost concept. We have studied now all the financial items, the transactions are entered, okay, only in the historical caste. Okay, historical caste. Then, when they prepare the financial statement, it must be based on the accounting principles or the concept, isn't it? Principles and accounting standards. Only then, that means that universally accepted principles and the accounting standards given by the institution of cost and books accountant, okay, or the international standards we need to follow. Only then they can do the comparison among the different countries or among different organizations. Okay, the same accounting principles and accounting standards must be followed while preparing the financial statements. Each organization cannot carry on their own methods. Okay, but in some very few cases they follow their own method. Okay, that one in first year 11th year you have studied the depreciation. Different methods are available, especially two, isn't it? Depreciation, we have learned two methods, isn't it? Fixed installment method and diminishing balance method. Okay, written down value method. Okay, fixed installment method or straight line method. Okay, straight line method, diminishing balance method, written down value method. Okay, so this method we have the right, each organization has the right to follow their own method for calculating depreciation on fixed assets, or for the reserve for the compensation fund, or for the provision for that doubtful debts. Okay, they may reserve for provision that they provide something. Okay, that all the reserves they can keep their own percentage, that they do not need to follow universally accepted method. Okay, now we will see the importance or the significance of financial statements. What are the significance of financial statements? But it is very important, isn't it? Without that financial statements, no business organization can be run, isn't it? So it is of great importance. First one, it is very significant for the management. Okay, why how it helps the management, how much they are using the financial statements in their performing their functions. Okay, here the management is the topmost authority to take decisions. Okay, or to control the organization, they should know the financial statements. The details of the financial statements only will help the management to take immediate and effective decisions related to the business operations. Okay, any activities of the business activities must be controlled, then they will decide how to control. So they will decide or they will take decision as per the financial statements. லாங் ஆன்சர் நம்பர் எதுவும் போடலையா, எப்படி கண்டுபிடிக்கிறதுங்க? 41க்கு 41 இதுக்கா எழுதியாச்சா? அக்கௌண்டன்சி முடிஞ்சா? ஓ இதுதானோ? எட்டணும் இல்லையா? 8 இதுக்கு சாய்ஸ் கொடுக்குறேன், நீங்கள் பார்த்தா பண்ணலன்னு நினைக்கிறேன். அப்போ இதான் தள்ளி வைக்கிறியா? பிறகு என்ன மக்களை, நான் இன்னும் குளிக்கவும் போகணும். financial statements of companies as per the Companies Act. Companies Act 2013, they have provided some provisions. Okay, it should be prepared as per the provisions of Companies Act. Okay, first it is telling as per section 2 and subsection 40 of the Companies Act 2013 says here the financial statement include what? Balance sheet. Okay, then profit and loss account or income and expenditure account. This one for the not for profit organization. Okay, then cash flow statement. Cash flow statement or fund flow statement. Okay, tool statement. Okay, or statement of changes in the equity. Okay, that will be given. Okay, as per section 240. Then another one, it says section 129 subsection 1. It states the financial statements must be a true and fair view. Okay, that must be there. True and fair view of the financial statements, and it should that to comply with the accounting standards given under section 133. Okay, accounting standards must be, it must be related with the or that section the 133, they have given this accounting standards. It should comply with these accounting standards only, then it will show the true and fair view of the state of affairs. Okay, then again 129(1) of the Companies Act states the financial statement must be prepared in a form, one prescribed form that is given in Schedule 3 of the Indian Companies Act. Okay, in the prescribed form only they have to prepare the financial statement. Okay, here they should comply with the accounting standards of section 133 of the Companies Act. Then it should show the true and fair view of the state of affairs of the business. The financial statement analysis we will study in the next class. Okay, students, so I may mark and give you the questions and answers in the intersession class. Okay, today I will wind up the class today. Thank you, students.